My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make some money. My job is not just to entertain, but to educate and teach, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Over the past 10 weeks, more than 40 million Americans, quarter of the workforce, have filed for unemployment benefits. Last week, we had 2.1 million new claims and 21 million continuing claims. Better than the week before, but still incredibly bad on an absolute basis. So you think the stock market would get crushed today, right? Sell. Obliterated. Wrong. Once again, the average spent most of the day well into the black, despite still more hideous macro data. Even as we sold off near the end of the session, Dow only sinking 148 points, S&P falling 0.21%, NASDAQ easing 0.46%. But again, though, the market was up most of the day. And if the decline were about the incredibly weak labor market, well, what would have happened this morning when we heard the unemployment claims numbers right from the opening? The reversal was more of a fear of actions that the president might take against tech, today's leader, because of his anger about social media and about the president's plans for punishing China over Hong Kong, punishment that could reverberate to our own companies that do business there. So then why did the stock market open up big on those hideous figures? At this point, it's become a cliche to insist that Wall Street's totally disconnected from Main Street. After all, how else could stocks go up when we got 21 million Americans on the dole, the worst unemployment rate since the Great Depression? Honestly, you know what? I think at this point, it's beside the point. The market's not been strong since the layoffs began in earnest because investors are indifferent to the economy. It's rallying because investors are actually bullish about the future of the economy. Let me lay it out for you. First, there's a new cohort of stock buyers who recognizes that we're not replaying the Great Depression here. The policymakers are too good. The situations aren't analogous. There was no safety net when the Great Depression got rolling. The banks went belly up. The money in your account, it disappeared. Corporations had no liquidity. Unemployment insurance, it didn't even exist. This time we've got the Fed printing enough money to pretty much guarantee that publicly traded companies will have a shot at raising capital through the bond market. We've had $1 trillion in just big stuff, but billions of others in loans, a bond issuance, anything that moves. And a lot of that was only because Fed Chief Jay Powell came out and said he'd be willing to buy corporate bonds of temporarily distressed companies that were actually good companies before the pandemic. Powell knew his history. He didn't want the bond market freezing up. And just by saying those words, he saved the day. That's why only one major publicly traded company has filed for bankruptcy. Hurts of the trillions of dollars that were at stake. Second, the $2.2 trillion stimulus package, it's had a huge impact. Those one-time $1,200 payments, the payouts, you know this, you might have gotten one, coupled with an extra $600 a week in unemployment benefits, they've given the consumer a lifeline. When you look at the high-quality retailers that cater to more frugal shoppers, here I'm talking about AutoZone, I call them high quality because they do their numbers, AutoZone, Burlington Stores, Dollar General, Dollar Tree, might have seen them on earlier this morning. They reported phenomenal numbers versus expectations. All four of these companies cited the federal government's generosity. All that stimulus money has been keeping us afloat. Let me put it this way. When the Treasury spends trillions of dollars to boost the economy and the Fed prints trillions more, what do you expect to happen? You better believe it's going to have an effect. A lot of people didn't think so. What fools those mortals were. Third, many people now believe that the worst of the pandemic is indeed behind us. Now, if you live outside of one of the major hotspots, it's only natural to assume that the extreme lockdown was an overreaction. There's an emerging sense that we've got COVID contained, and that means the business world can go back to normal. Now, I'm not totally sold as a small business owner. I know most of these smaller enterprises rely on crowds, remember that word, to succeed. Their margins are too thin to really thrive without large throngs of people. And even though most of the country's reopening, big gatherings are still off the table. Serious problem. But the bulls have visions of normalcy dancing in their heads, and rightly or wrongly, their view has made you the most money since the market bottomed in March, some 7,000 Dow points ago. The bulls are still in charge, or were until 245 today. Fourth, the vaccine. See, not too long ago, the consensus among public health experts was that there was no way to develop a vaccine fast enough to save the economy. The land speed record for a vaccine is 4 years for a disease called the mumps, which, trust me, was painful as all get out, but also easier to figure out. Now, we've never been in a situation like this before. Nearly every single major pharmaceutical company on Earth is working on something to combat COVID, along with a ton of smaller biotechs. That's unprecedented. Now, big pharma executives tend to be a pretty cautious lot. So when we hear Merck's Ken Frazier talk about the near-term possibilities of vaccine, or J&J's Alex Gorski talking about how something's workable in the billions of doses by early next year, that means something, or should. If we get a vaccine sooner than expected, well, then that's the whole ballgame. Put it all together, and you can understand why so many retail stocks have caught fire in the past week, a lot of them all-time highs. That's the whole basis of this Awaken America rally. So with all these positives driving the rally, why the heck don't people believe it? What makes the market strength so confusing? I think it's because of a third V, not the vaccine. Mr. Spock. Not the vaccine, not the vanquish virus. I'm talking about the possibility of a V-shaped recession. The other day, Jamie Dimon, the CEO of J.P. Morgan, perhaps the most important financier in the world, predicted we'd have a short, sharp, often described as V-shaped recession. That's a quick downturn followed by an equally rapid turnaround. As far as the economy is concerned, a V takes us back to where we were before the pandemic, which, by the way, was a really good place. Before Dimon's pronouncement, a V-shaped recovery was widely considered a long shot, maybe even fanciful. But overnight, it became the prevalent view. And that's the rocket fuel behind this week's incredible rally until the last hour of the session. Now, you know the mentality that produced this move, but there is one problem. I don't know if I can be completely convinced. Oh, I'd love to have a rapid V-shaped recovery. Everybody would, except for the short sellers. Be phenomenal. Unfortunately, I think the V is chimeric. At the end of the day, there's been too much carnage among the small and medium-sized service operations that do form the backbone of America's economy and job creation. Many of these companies have either been doomed by social distancing or they missed too many payrolls or debt payments because they were deemed non-essential and will have to close their doors. They can't wait it out for the vaccine. One key part of the lockdown, most states placed a moratorium on evictions and debt collections. As we reopen the economy, though, those protections are going to go away. And if your business can't make rent, you're toast. I think the V for Victory crowd may have gotten ahead of itself. We're still in for a rough ride, even if it's not the end of the world or the Great Depression redux. So why even own stocks then? Because as I never stop reminding you, we have a new economy, one that's based on nimble technology and healthcare companies, coupled with a few winning retailers whose competitors are in tatters. They were not essential. And financial technology companies like PayPal that are taking over the world. We're going to speak to PayPal in a moment. That's why I think you got to stick with, say, the work from home place. We just booked a Workday last night after their excellent quarter, stock 7% up. These stocks have been big winners since the bottom in March, and while many of them have fallen out of favor this week, I think that's temporary. The bottom line, it's a new market. It's a new economy. The Fed and the Treasury have learned from the mistakes of the past, which is why this market's been able to roar over the past couple of months, even as the data's been real ugly. Once that stimulus program runs out of money, I'm betting Wall Street gets less sanguine about the future. And some of these great gains, they could be throttled back by reality. Let's go to Connor in California. Connor.
How's it going, Jimmy? Chill.
Chill's trying to chill, man. I had a little rough couple of days. What's up?
Oh, man. Big fan of the show and first-time caller. Thank you for taking my call and for all your great advice.
Thank you.
I know you're a huge Philly sports fan, so I just wanted to get your thoughts on NSGS.
We like it. We think the parts are worth more than the whole, but I've got to tell you, the sports fans are all lining up and buying this DraftKings. We had them on last week. DraftKings is a play on the reopening of sports. It's a little too hot for this guy, but I understand the bull story. Lambros in New York. Lambros.
Booyah, Jim.
Holy cow, Lambros, you sound like a youngin'.
I'm just starting to learn about investing, and my big question is about the airlines. Airline stocks are coming up off their lows as the economy reopens.
Right.
Would you consider Delta a buy right now?
No, the only one that I'm actually willing to, I like Gary Kelly. He's the CEO of Southwest, the symbol's LOVE, LUV. And I would go with that one. I'm not a big fan of the airline business these days. Too many issues, but Southwest is the one if you want to go. And I hope your ma was on there, right? Is that your ma there? I like young people. People think I like young people. That's kind of a generalization. All right, it's a new market and a new economy. Wall Street may get less sanguine, and they seem to in the last hour. But the market's been able to roar from 18,000 at the end of March. Well, Mad Money tonight. During the coronavirus pandemic, cash is out and touch-free payments are in. You want any COVID cash? Sold to you. I'm talking to the CEO of PayPal to find out how it's helping with the trend. Then, why weightlifting could be the key to this market, although one's maybe imbalanced. And I'm sitting down with Salesforce CEO Mark Benioff after earnings that the market doesn't seem to like. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.